Hello everyone, I'm Dr. Ramandeep Kaur, Faculty, Department of Commerce of Bhopal School of Social Sciences, and I'm here to discuss with you a very important topic of financial accounting, that is consignment accounts. Now before understanding what is consignment accounts, let us understand what is the meaning of consignment. Now consignment means to consign. It is the process of sending of goods from one person, that is the owner, to another person, that is the agent, for the purpose of sale. Now in this arrangement you will find that there are two persons, the consignor and the consignee. The consignor is the owner of the goods, or you can say he is the manufacturer of the goods, and the consignee is the agent for the consignor. Now why does the consignor appoints this consignee or the agent for the purpose of sale? What is the reason? Now the consignor is the manufacturer of the goods. He wants to concentrate more upon the manufacturing process, he wants to concentrate more upon the production activities, and he does not want to look after the selling process, the selling activities. So what he do is he appoints another person, that is the agent or the consignee. Now the owner, he transfers the goods to the consignee. Remember, he sends the goods to the consignee, he transfers the goods to the consignee, and it is the consignee who further sells the goods to the buyers or the customers on the behalf of the consignor or on the behalf of the owner. Now whatever sales revenue is being generated after selling of the goods from the buyer is in turn transferred to the consignor by the consignee. Now when the consignee is selling the goods on the behalf of the consignor, that is the owner, he is performing a particular service, so obviously he is going to expect something. So his expectation is in the form of commission. So commission is very important under consignment accounts. So this commission, the amount of commission, it depends upon the sales proceeds or the sales revenue that is being generated by the consignee. Higher the sales revenue, higher will be his commission, and lesser the sales revenue, lesser will be his commission. Now under this arrangement again, the goods that are being sent for the purpose of sale are known as goods sent on consignment, and the consignee prepares actually a statement that is known as statement of accounts or statement of sales. He prepares this statement and sends it back to the consignor. Now what does this statement actually contains? This statement contains everything, the entire details about the goods that are being sold by the consignee. It contains the number of units of the goods that are being sold, the price at which the goods are being sold, the commission that is actually charged by the consignee, the expenses that are being incurred by the consignee for handling the goods, and also the amount of advance that is being paid by the consignee to the consignor. So everything, the complete details about the goods you will find in a statement that is known as statement of accounts. So here there are two parties that are involved. One party is the consignor and the another one is the consignee. The consignor is the person who is having the title of the goods, or this is the person who is the owner of the goods. The consignee is the person who is only having the possession of the goods or the custody of the goods. So the person to whom the goods are being sent for the purpose of sale by the consignor is known as consignee. Now what is the difference between sale and consignment? Now sale and consignments are the two terms that appear to be similar, but there are different points of differences between them. Let us first of all understand what are the points that make sale and consignment different. First of all, under sale, the goods are being transferred by the buyer along with the title of the goods. So this is important. When goods are being transferred to the buyer, the title of the goods also is transferred. But under consignment, only goods are transferred, but the title of the goods still remains with the consignor. So that is important. Second is in terms of return policy, goods once sold under sales cannot be returned back to the seller except if they have to be returned as per the specific agreement. And under consignment, unsold goods can be returned back to the consignor as they are actually the property of the consignor. If goods are lost after sale or delivery, the buyer will suffer the loss here in case of sales, and under consignment, when the goods are lost in transit, the loss will be borne by the consignor. So these are the points that are very important that make sales and consignment different. Now we know that consignment accounting is an arrangement where the consignor is sending the goods, he is transferring the goods to the consignee, and the consignee is selling the goods on the behalf of the consignor. And when he is selling the goods to the customers on the behalf of the consignor, he is obviously charging something, and that amount is known as commission. Now there are three types of commissions that can be charged by the consignee from the consignor. First is the ordinary commission, the second is the Del-credere commission, and the third is the overriding commission. Let us understand the meaning of all the three different types of commissions. First of all, ordinary commission. Ordinary commission is the amount that is being paid by the consignor to the consignee, and this is the percentage that is fixed as per the agreement between them. Whatever percentage is mentioned in the agreement, that particular percentage is paid to the consignee, whether it is 2%, 5%, 10%, whatever is the percentage that is agreed upon, that is actually paid to the consignee. The second type of commission is Del-credere commission. Now this type of commission is being paid to the consignee when the consignee sells the goods on credit. Yes, now we know that selling of the goods on credit is very important to actually increase our sales. So when the consignee sells the goods on credit, he is actually paid the Del-credere commission. Now when the consignee is selling the goods on credit, he is not only taking the responsibility of selling the goods on credit, but he is taking out the responsibility of collecting the money from the debtors. So that's a very important job that is being performed by the consignee. So he charge a special type of commission, that is Del-credere commission. Now one thing should be noted here in this particular case, that in case of Del-credere commission, to receive Del-credere commission by the consignee also bears the loss that is being caused by the bad debts. Any unrecovered amount is there, the debtors are not paying that, so actually that particular loss is borne by the consignee. So when the consignee is taking so much pain, obviously he is going to charge some extra amount for performing this particular service, and this is known as Del-credere commission. The amount of Del-credere commission is over and above the ordinary commission. This is to be noted here. The third type of commission is overriding commission. So when this overriding commission is paid by the consignor to the consignee. So when the consignor wants that his goods should be sold out by the consignee to the customers at the higher price, so this type of commission is being paid. Remember, higher prices means higher profits for the consignor. So if the consignor is getting higher profits, obviously the consignee is going to increase his amount of commission. He is going to, he wants some additional commission. So this additional commission is known as overriding commission. So we have understood ordinary commission means the normal commission, the percentage is paid as per the agreement. Then there is Del-credere commission. Del-credere commission is paid to the consignee when he makes credit sales, when he is taking the responsibility of collecting the money from the debtors, and when he is bearing the losses that are being caused due to bad debts. And the third is overriding commission. When the consignee is selling the goods at some higher prices, he is charging higher amount, he is charging an extra amount, and that is known as overriding commission. Again, to revise the things, what are the features of consignment? Under consignments, you are having two parties. One is the consignor and another one is the consignee. Now the possession of the goods are only with the consignee, and the ownership still remain with the consignor. The consignee has to sell the goods on the behalf of the manufacturer or the consignor. The consignee has a right to reimburse the expenses that are being incurred by him for maintaining the goods. The unsold goods or the closing stock is actually the stock that belongs to the consignor and not the consignee. The consignee gets a commission and not a share in profit. So that is again important. The consignee is only eligible to get the amount of commission and not a share in profit. Account sale is a statement that is being prepared by the consignee, and this statement is being sent to the consignor. It contains the amount of sales that are being made by him, the expenses that are being incurred by the consignee, his commission and the advance that is being given by him to the consignor. So from the sales revenue that is generated, he deducts his expenses, he deducts his commission. From the balance, he even deducts the advance that is being given by him to the consignor, and whatever balance now remains is being sent by him to the consignor. So account sale is a very, very important statement that is being prepared by the consignee. Now we have understood what is the meaning of consignment and how does actually this arrangement takes place. Now coming to the accounting treatment in the books of consignor. Now under consignment accounting, you are supposed to prepare consignment account. And always remember that the nature of consignment account is always nominal. That is, you have to record all the expenses and all the incomes in this particular account. Now the consignor, when he is sending the goods to the consignee, when he is transferring the goods to the consignee, he may send the goods at cost price or at the invoice price, and the accounting procedure, it differs in these two cases. Right now we are going to understand what happens when the goods are being sent by the consignor to the consignee on cost price. So there are certain general entries that are to be passed in the books of the consignor under cost price method. Let us first of all understand what are the different entries that are to be passed. After passing the general entries, we are going to prepare the consignment accounts. So the first entry is when the goods are being sent by the consignor to the consignee, the first entry is consignment account is debited and goods sent on consignment account is credited. Now always remember, when the consignor is sending the goods to the consignee, the goods are going out from his side to the consignee. So when goods are going out, goods account is to be credited because goods account is a type of real account, and the rule for real account says debit what comes in and credit what goes out. So goods sent on consignment account is to be credited and consignment account is to be debited. When the expenses are being incurred by the consignor, the entry is consignment account debited to cash account to creditors for expenses if the expenses are being paid by the creditors. Cash or bank account is to be credited because actually the cash is going out from the consignor's side. Cash is a type of real account, and again the rule for the real account is debit what comes in and credit what goes out. So when the consignor is making payment for the expenses, cash is going out, therefore cash account is credited and consignment account has to be debited. Then when the expenses are being incurred by the consignee, so the entry is consignment account debit to consignee's account. Remember, the consignee is making the payment for the expenses. So cash is not going out directly from the consignor's side. So since consignee is making the payment, so the entry is consignment account debit to consignee's account. Now the next entry for charging of the commission by the consignee. Now the consignee is sending the goods, so obviously he is charging some amount as commission. So again the same entry is passed, that is consignment account debit to consignee's account. Now when the sale is made by the consignee, the entry is consignee's account debit to consignment account. Remember, the sale is not made by the owner directly. It is the consignee who is actually making the sales on the behalf of the consignor. So it is consignee's account, it is his account that is to be debited. The consignee's account is debited and consignment account is to be credited. Next is for the unsold goods by the consignor. Now generally the entire goods that are being transferred by the consignee to the consignee are not sold out. Some goods still remains with the consignee, and those goods are known as closing stock. The unsold goods are known as closing stock. So when the closing stock is there, the entry is consignment stock account is debited to consignment account. Next, for the balance of consignment, at the end our objective is to find out whether the consignor is getting profits or the consignor is getting losses. So when the consignor is getting profits, to record profits, the entry is consignment account debited to profit and loss account. Remember, the consignor will get the profit if only the credit side is greater than the debit side. So the difference will be transferred to the profit and loss account, and the entry will be consignment account debit to profit and loss account. And in case loss is recorded, therefore the debit side will be greater than the credit side. Again, the balance is transferred to profit and loss account. We know that all the profits and losses are ultimately transferred to the profit and loss account. So the entry is profit and loss account debit to consignment account. Now, for any kind of advance that is being received from the consignee by the consignor, it is the consignor who is getting cash as advance. So entry will be cash or bank account debit to consignee's account. And if this amount of advance is received in certain type of bill, any kind of bills, then it is bills receivable account debit to consignee's account. Now, for the final settlement of the account, there is another entry that we are supposed to pass, that is cash or bank account debit or bills receivable account debit. If again the settlement is made in terms of bills, so bills receivable account debited to consignee's account. And at the end of the year, for closing the goods that are being sent on consignment, the entry will be goods sent on consignment account debit to trading account in case of a manufacturing business, and to purchases account in case of a trading concern if it is a trading business. So these are the different journal entries that are to be passed to record the transactions in the books of the consignor. Now let us understand what is the format of the consignment account. Once the journal entries are made, then we are supposed to prepare the consignment account. What is the format of the consignment account? Now we have already understood that consignment account is a type of nominal account, that is, it records all the expenses and incomes. Now let us understand what are the items that are there at the debit side of the consignment account and what are the items that comes at the credit side. Now at the debit side, the first item is 2 goods sent on consignment. Now remember, what was our first entry? Our first entry was where the goods are being transferred by the consignor to the consignee. So the entry was consignment account debit, 2 goods sent on consignment. So this is your consignment account. So it will come at the debit side. Whatever account is credited in your journal will be debited here in your ledger. So 2 goods sent on consignment account was credited there. So here it will come at the debit side. And remember, we are recording the goods at the cost price. Therefore, the cost price of the goods are recorded. So first item is 2 goods sent on consignment account and the cost price is recorded. Second is when the expenses are being borne by the consignor. So the entry was consignment account debit to cash or to bank. So to bank is the second entry. So here the consignor is taking the responsibility to pay off the freight expenses, the carriage expenses, the insurance expenses related with the goods. So cash to pay off all these expenses, cash is going out. Therefore, cash account is debited here in the consignment account. Then when the consignee is taking the responsibility to pay off the expenses and he is charging the commission, the entry was consignment account debit to consignee's account. Therefore, you will record here the amount of different expenses that are being incurred by the consignee for handling the goods, and even the commission that is being charged by the consignee for selling out the goods. Everything is recorded here at the debit side. Then at the credit side, what is the important item that is to be recorded? There are 2 important items that are to be recorded at the credit side by consignee's account, and here you are going to record the figure for sales, the amount of sales revenue that is being generated by the consignee. Remember that sales are not directly made by the consignor or the owner, it is the consignee who is making the sales. So the entry was consignee's account debit to consignment account. So here it will come at the credit side by consignee's account. And in case there are certain goods that are remaining unsold, means you are having closing stock and the closing stock is transferred to consignment stock account. So entry will come at the credit side in the name of by consignment stock account. And again, the objective of the consignment account is to find out whether there is profit or there is loss for the consignor. So if the credit side is greater than the debit side, definitely the consignor is going to have the profits, and the profits will be transferred to the profit and loss account. And if the debit side is greater than the credit side, the balancing figure will come in the form of loss, and this loss will be transferred to the profit and loss account. So this is the journal format for the consignment account that is there, that actually needs to be followed. Now we have seen that closing stock, or the stock of unsold goods, that is a very important part of consignment accounts. So in order to record your closing stock, you have to do the valuation for closing stock. So how the valuation of closing stock is actually done? What are the different rules that are being followed to do the valuation for the closing stock? Now generally the rule says that when the goods are being sent by the consignor to the consignee for sale, and the consignee has not sold any of the goods, even a single unit is not being sold out, then the balance of consignment account is transferred to consignment stock account and is taken at the asset side of the balance sheet. Remember our final accounts where we show the closing stock is shown in the balance sheet at the asset side. So consignment stock account is also shown at the asset side of the balance sheet. Second point says that when all the goods are not sold, remember when some of the units are being sold out and some of the units are not sold out by the consignee, then the value of closing stock is recorded by following the simple rule that cost price or market price, whichever is lower, whichever is the lowest value, at that particular value the closing stock will be recorded. So market price is generally given to us, that is the current price of the goods. How to calculate the cost price for the unsold goods or for the closing stock? So to calculate the value for the closing stock at the cost price, we have to make use of the formula. What is the formula to calculate the value for closing stock at cost price? So formula is proportionate cost price of the goods in stock plus proportionate expenses that are being incurred by the consignor plus proportionate expenses that are being incurred by the consignee except sales expenses and commission. So proportionate expenses incurred by the consignee except sales expenses and commission. So why sales commission and sales expenses and commission are excluded from this? Because sales expenses are generally paid on the goods that are being sold, and closing stock means the goods that are unsold. So when the goods are unsold, how can you incur sales expenses on these goods? Therefore sales expenses are actually excluded. And even the commission is being paid on the goods that are being sold. Again, these goods are not sold out in the market, so again commission cannot be charged on the goods that are being unsold. Therefore sales expenses and commission are excluded to calculate the value for the closing stock as per cost price method. So the valuation of closing stock, that's very important under consignment accounts. So thank you so much. That's all for today. Again in the next video, we will come again with another important and interesting topic of financial accounting. Till then, thank you.